Hello. Today is August 9th, 2024, and it's time for a new stock pick video. Before getting into it, I need to apologize for missing a few months of stock pick videos as my marketing assistant moved on. So I got thinking, why not use AI? I took this as an opportunity to try out the new AI technology that the stock market has been so hot over, so I created this video using AI. This is my personal avatar made using synthesia.io. I uploaded my stock pick video from December 2023, and then the AI tool created my avatar, or persona. I then typed in the text and it created the video. It's not perfect as the technology is still new, but it will get better. Now let's get into our video. As usual, I am going to review the performance of my picks from this time last year first, then I am going to give a market and economic conditions overview and proceed with my top stock picks for the next 12 months and beyond. This time last year I picked National Grid. The stock was up 17% in USD including dividends. Fortis up 12.8%, Ennis up 11%, and MS&AD Insurance up 84.3%. These stocks averaged a total return of 31.3%, which compares with 19.9% for the performance of the MSCI World Equity Index, as represented by the URTH ETF. The economy in the last year or so has been surprisingly resilient despite the big rise in interest rates. Higher interest rates means lower demand for homes and cars as these things are usually financed. A large portion of households' income goes towards housing and transportation, so when the cost of these items goes up, there is usually less money left over for discretionary spending and saving and investing. Consequently, the economy and stock market tends to not do too well. Well, it turns out that government deficit spending more than compensated for the expected slowdown in consumer spending, so it kept both the economy and the markets afloat. Deficit spending is expected to continue into the last quarter of 2024 and into 2025, even if the Republicans get the White House in the next election in the US. With that in mind, it's unclear now as to what will dominate, natural market forces or government spending. Making a top-down call on which way the economy goes under such massive intervention from governments around the world, and especially the US government, is hard. Since it's always a good idea to stick to a proven approach of picking good companies at good prices, I'll be doing that again for my best stock picks. My first stock pick is Vale SA, stock symbol Vale. Vale SA is a large global miner and the world's largest producer of iron ore and pellets. In recent years, the company has sold non-core assets such as its fertilizer, coal, and steel operations to concentrate on iron ore, nickel, and copper. Earnings are dominated by the bulk materials division, primarily iron ore and iron ore pellets. The base metals division is much smaller, consisting of nickel mines and smelters along with copper mines producing copper in concentrate. Vale is in a secular growth space, producing the metals and minerals needed by the growing battery EV vehicle market. The stock pays an incredible 14.5% dividend. As investors, we just need the stock price to not go down. Do well. Even if the dividend is cut by 1/3, we'll still do well. My second pick is going to be Bell Canada, symbol BCE. BCE provides wireless, broadband, television, and landline phone services in Canada. It is one of the big three national wireless carriers, with over 10 million customers, constituting about 30% of the market. The stock is priced reasonably well and has a dividend yield of 8.3%. My third stock pick is TC Energy Corp, symbol TRP. TC Energy operates natural gas, oil, and power generation assets in Canada and the United States. The firm operates more than 60,000 miles of oil and gas pipelines, more than 650 billion cubic feet of natural gas storage, and about 300 megawatts of electric power. This sort of company does well almost regardless of economic conditions. So the key is to buy the stock when the price is good. I believe the price is reasonable, and it has a dividend yield of 6.4%. All three stock picks have some similar characteristics. They are large cap stocks. They have strong balance sheets and good dividend yield. Historically, the stock market usually peaked around the time of the first interest rate cut by the US Fed. Then it takes about 12 months for the market to bottom. During this time, it's important to stick to quality large cap stocks. Towards the end of an easing cycle would be the time to move into small cap, lower quality and growth stocks, as those will tend to move up the most in a recovery. As always, if you have any questions about these picks and how they fit in your hopefully already well-diversified portfolio, or if you have any other investment-related questions, please give us a call. Thank you and have a great day.